is unable to calculate intrinsic value for new age beverages to establish if it is average at a substantial discount. New age beverages is loss making. We can't compare its value to the US beverage industry. But the good news, new age beverages is good value based on assets compared to the US beverage industry average. We can look at the future. We can see that the expected annual growth rate 90.6% annual growth in earnings. Estimated growth in earnings. We can look at this. The estimated earnings growth very high, very healthy, very good. You can see the actual and the estimated. It's a little bit of a difference. You can see the estimated is a little bit of off from the actual. We can look at the past and the future earnings per share. We can see it's looking much better in the 2020, 2021. So in the future, we're looking at what? In the future, it must seem to be able to have a lot of growth potential. It's unable to establish if new age beverages will efficiently use shareholders' funds in the future without estimates of return on equity. When we look at the past is looking poor. We can see new age beverages does not make a profit, and the year-on-year earnings growth rate was negative over the past 5 years. It's unable to compare new age beverages 1-year earnings growth to the 5-year average, as it is not currently profitable. Unable to compare new age beverages 1-year growth to the US beverage industry average, and it is not currently profitable. We can look at the revenue. The revenue is looking good, the earnings looking poor. So when you look at the performance of the previous years, all bad. It is difficult to establish if new age beverages has efficiently used shareholders' funds last year. Return on equity greater than 20%, as it is in the loss making. We can look negative 14.88%, negative 14.49%, negative 16.04%. That's the return on equity. The return on assets at minus 14.49%, and the return on capital at minus 14.88%. This is looking bad. You can see it is difficult to establish if new age beverages has efficiently used its assets last year compared to the US beverage industry average return on assets that is in the loss making. It is difficult to establish if new age beverages improved its use of capital last year versus 3 years ago return on capital employed, as it is currently loss making. But the good news is the health. This company is looking rather healthy. This is why it's looking healthy. The assets to liabilities. New age beverages is able to meet its short-term 1-year commitments with its holdings of